Euro/Norwegian kroner. First off, read this disclaimer carefully. In this video, we go into the money space. Euro/Norwegian kroner. Here, the euro is a base, 11% from the 52-week low, 19% away from the 52-week high. Here you can get some data about Norway. Okay, unfortunately, we do not get any seasonality. Remember, of course, like, subscribe, share, and comment. It's a fantastic option, and free. And here we have the pair. Let's go big picture galaxy brain and go way back. Okay, so you can see that for a very long period there was more or less a consolidation pattern between the euro and the Norwegian kroner. Then we did have, as of late, a bit of a breakout. Something that is quite interesting is a pattern that jumps off the charts. This is the lead up. Well, this is basically, you know, a very significant portion of the financial crisis. And then you have the ensuing bull market, which led to a weakening here of the euro. So the euro strengthens, the euro weakens. This pattern here looks a lot similar, you know, it looks very similar to this pattern, which started with the euro strengthening against the kroner, but then weakening. If something very similar is about to happen, you could start to hypothesize that there could be more weakening in the euro vis-a-vis the Norwegian kroner. It's a possibility. It would certainly be the case, well, it would be very much the case if we do see the fishing industry strengthen, and also oil and gas. It's a possibility, but so far it is pretty clear that the euro is on an uptrend, and there are many support levels that has to be broken, especially the red 100-week moving average, before it makes sense to be really like, okay, maybe we will have something like this. It's important to bear in mind that when it comes to these currency pairs, it's all about relative strength. Norway is, you know, a rather developed country. Euro is a basket of European countries, hence that's how you can get those dynamics like this. But that's a basic thing with all of Forex. And the fantastic thing about Forex is that it is very easy to go long and easy to go short. And there's enormous amounts of leverage opportunities. But that's basically the technical setup at this point. The correlation with the S&P 500 is 24%, so very modest correlation. Looking at the daily data points here, here's the red 200-day moving average, test, 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 and test. So the euro has weakened meaningfully if you measure from this low here to this high here to the recent low here. Minus 21% in the Forex market is actually quite profound. We are stuck between resistance at the blue 100-day moving average and the 200-day in red. This is interesting. Very, very interesting, because if you do get a break here of the 200-day, then we can really see some weakening. So basically, these are the levels to watch. Breakout above here would be bullish, breakout below here would be bearish, and we are very close to both. So something will happen. RSI is quite in a modest range, very much moving along with price action. The accumulation distribution line, it's been declining. So people are certainly exiting their euro positions. The correlation here with the S&P 500 on the daily data points is minus 91%, so quite negative, which could be, you know, an alternative way to be bearish on the S&P 500, because that is a very strong correlation. Let's see if we can get some other patterns here, if there's anyone who jumps out at me. You do see that there are some cycle patterns. I'm not sure how consistent they are. Not really any especially consistent pattern, but there is some clear cyclicality. Sometimes the cycle patterns are very consistent in the length of the rise and the pullback, but other times you do see that they change out. Okay. that's basically all the... We unfortunately do not get the other data. Seasonality would be interesting, but it's not available, unfortunately. Probably because the Norwegian kroner is considered to be a bit exotic by stockcharts.com. My long-term outlook here for Euro/Norwegian kroner, it is really difficult to call, because you know, there's so many dynamics happening in the Eurozone at the moment. We have, you know, the risk of other exits. Then again, there's call for reformation of the Euro contract, which would be European contract, which would be beneficial and could make it more appealing. But it is a bit of a mess. But I do think that long term, I think there will be a United States of Europe, which would include Norway. But that is quite long term. We're talking like maybe like a decade or something. Yeah, let's look at some stocks. Let's look at Coca-Cola. So, you know, long term here, well, maybe not that long, but you can see here, this is this rounding bottom pattern. Ever since actually the dot-com bubble. Then we do have this massive breakout. Very impressive moves. You see here that Coca-Cola actually moves in relatively consistent cycles. So let's do some cycle analysis. This is some very nice cyclicality. Over many years we have seen rather consistent cycles. You know, there's been a break every now and then, but yeah. The issue with cycle patterns is that when you have a clear trend, you know, the basic news are priced in, then it will be very reliable. And this was beautiful. I mean, it could be long, short, long, short. It was basically like printing money. The problem is that when there is an exogenous surprise event, then the cycle patterns can be shattered. And what recently happened with the lockdown is one of those events. The cycle patterns are like, whoa, they have no idea what's going on, and it's very difficult to get back into the groove. However, I am seeing some cycles. Seems like we have these very short cycles, very small cycles, but they seem to be consistent. Yeah, somewhat consistent. Maybe a little bit smaller, like that. There seems to be some cycle patterns. I mean, Coca-Cola likes cycles. Based on the cycle analysis, it seems like we are in a rising cycle, but maybe towards the later part of that rising cycle, before a declining cycle. But that's purely based on these two, which are rather small. Okay. When it comes to Coca-Cola, thinking like long term, I am actually rather bearish. The reason is that Coca-Cola is part of, it's played a very key part of a very negative health trend, contributing massively to all kinds of illnesses like diabetes especially, and I do think that there will be a reckoning. I do, in the same way that the tides changed very dramatically for the fossil fuel businesses, because back in the day, not, you know, I mean, thinking about the 80s, when the fossil fuel businesses were popular, they weren't demonized back then. But people were talking negatively about them. Every now and then, people kind of knew that, oh, okay, it's kind of not a good idea, is it? But then it changed very quickly, and they went from being super popular, attracting all the talent, to just becoming pariahs. And I think something like that will happen to the fast food industry, the candy industry, and you know, the soft drink industry, which Coca-Cola is in. And I think it will happen quickly. The negative side effects of these products are simply too big. And the paradox also, you know, because Coca-Cola, they were one of the first companies to boycott Facebook, you know, stop, you know, due to, you know, the whole Black Lives Matter thing. And the paradox, of course, is that there's no company, I mean, there's not that many companies that has done more to contribute to the very bad health of blacks than Coca-Cola, you know, along with, you know, the other, you know, very bad drink and food companies, so yeah, something to think about. It is true that Coca-Cola has healthy drinks as well. The problem is, historically speaking, companies have a very difficult time. It's very difficult for a company to change its identity. So if the identity is the bad stuff, it's very difficult to change. In the same, that's also why we see that these, even though the fossil fuel companies know that the future is in renewables, extremely few have done any change, substantial change. So they are going down big. Okay, let's look at Verizon. And here again we do certainly see some cycle patterns here, but they seem to be a bit more erratic, not that consistent, but clearly it moves in cycles. We have basically broken, we have closed at the new all-time high, but intra-week we have not yet taken out the high here from the .com bubble. Recently testing support at the red 200-week moving average, found support, but you can see here that this stock is kind of, it's very erratic. It slashes to pieces, these moving averages, so you gotta be a bit careful about reading too much into the moving averages. Whether moving averages matter, as an example, it depends on the actual price action. How does it react to them? The 50-week moving average, like here, it was quite consistent, but generally speaking, this stock tends to be a bit loose when it comes to the moving averages, yeah. So it seems like the 50-week moving average and the 200-week are some of the most consistent, yeah, okay. That's Verizon. And let's go to, Charles, S, I think I remember the ticker, SCVH. No, SCHV. Yay! There are so many tickers, so it's a bit of a memory game. Okay, big picture here for Charles Schwab. I'm a huge fan of Charles Schwab as a company, because they are the ones who spearheaded this zero commission revolution, at least in among the regular brokers. So I'm a huge fan of that. That's been one of the most valuable contributions to the democratization of finance. They should be rewarded for that. Looking at the charts here, there are some problematic patterns. You have a head and shoulders pattern. Shoulder, head, shoulder. Quite clearly, we do have a breakdown. That is a problem. Just because we do have that confirmed, that doesn't mean that there's a guarantee that we have to go down, the size of that pattern, but it elevates the risk. Hence, especially now that we have a rejection at key moving average here, and we are fighting frantically some of the faster moving averages. It's a vulnerable position here for Charles Schwab. It just is. It's kind of hanging here onto for dear life. Yeah. We don't have time for anything more. Okay. Don't fight the trend, and may the trend be with you.